Hello and welcome to another MCO update on HBAR. The HBAR chart is still in this sideways consolidation that we talked about in the previous video, and we're holding still above the previous swing lows. So previous swing lows here on the 30th of April and the 24th of April were located at 18 cents. Still holding above it. It's not a super important level, I have to tell you. It just isn't. It's not really a Fibonacci level. And the main support area I'm watching here that could provide support in this current B-wave pullback is between 16.8 cents and 13.8 cents. That's standard Fibonacci support for such a B-wave correction. But I mean, there's no guarantee that this is a B-wave. We could just get one more high to form 5 waves, but as I explained to you, the problem with this structure to the upside is that the blue third wave is too short. Yeah, I mean, it's not too short to be valid as a wave 3. I just don't trust it. It's not even reached the 123.6 extension. I mean, it got rejected at previous swing highs, so that's the explanation why it found some weakness there, or it got rejected because there were key levels. Also on the larger time frame, exactly at that point where it got rejected, we have a descending trend line here from this wedge pattern. Maybe not exactly there, but in that area. So that's another factor. So just couldn't break above, and we might be in this B-wave correction, yeah, which again isn't guaranteed yet. It's nothing is ever guaranteed. It's not confirmed yet, but we have at least the support levels to watch. Now, that being said, this green line at around 20.2 cents acts as important resistance. So any break above would also be potentially a breakout that can send us higher towards 23 cents, 24, maybe even 25. Now, in the very short term, this last swing low at around, yeah, it's actually 17.5 cents here, these previous swing lows. That red line needs to be watched, observed, because any break below it would confirm further, in my view, that this C wave to the downside within circle wave B is actually unfolding. Because until we break below that level, I mean, it technically could form higher highs from here. And it's possible that the blue wave 4 bottomed already on the 30th of April, but I don't trust that because the rally from that low, as you can probably see, it was only a 3-wave move up. So current thesis would be we have 3 waves down from the high in an A wave. This here could be a B wave, and now we move down, not in a straight line, but possibly like that, yeah, in wave C to the downside. At least that's what I'm considering. To keep the pressure downward, the market needs to hold below that 19.1, 19.2 cent level, the last swing high that formed on Thursday. What is possible, but not necessarily expected, is a wider B wave. So if we push higher from here, I would probably watch first for a more extended B wave before we go down lower. Would that change anything? No, it would just mean short-term fluctuations. It would do this before we go down lower, yeah? So not really any significant change there. So yeah, that is what I'm tracking currently on the HBAR chart. Just consolidation, bit boring, bit of selling pressure right now, but not necessarily a surprise with only a 3-wave rally to the upside. So I'd say we at least need to be prepared for lower prices in the short term, and then the market could find some support here. First of all, at this previous swing low, but then 16.8 cents, 15.8 cents next. That's the update on HBAR. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.